In this video, I'm going to show you the UK stocks that I bought this week. I'm also going to give a brief update on my performance as this video was recorded as of Wednesday close. Currently, I will be at a festival. And if you like the video, please hit one of these to help beat that YouTube algorithm. Typically, I would mention Google Finance and how well the FTSE 100 has done, which in the last, since Friday's close up until Wednesday close, the FTSE 100 gained about 0.85%. The FTSE 250 gained 1.02%, and the S&P 500 roughly gained 1.28%, but the market wasn't closed. As for myself, my portfolio was only up 0.47%, although this is only a 3-day period, and even when I do performance updates weekly, it's still very speculative and very short term. I don't dictate my performance or emotions through what I have on a weekend, but instead I like to do it just for fun and as a general comparison, because I believe that over the longer term my investments will outperform, even if at the moment they are currently underperforming. And that's actually a good point to bring up. I've spoken about my performance, but I've not really gone into detail about it for quite a while now. I've mentioned that my performance has certainly been doing quite poorly since the start of the year. At the moment, I'm currently up 23.99%, which from April 7th is when I started, although it starts earlier on Freetrade, and I'm just taking this for what it is. This is before I could even deposit money in the account. That's how much I'm up, and I think that's quite impressive considering I've only been investing since April 2020, which is 16 months. I think that's quite good. If we assume an 8% annual return each year, I'd say that's quite good, providing it's able to keep and sustain these gains. Although, don't forget, 2020 was a fantastic year, and so overall I am still underperforming the markets. And I have actually, my all-time high for the portfolio is roughly around 43.35%, once more according to Freetrade, because I no longer track my portfolio outside of this. Obviously, I look and see the general market trends and how my stocks are doing. Ultimately, I don't use any external software to track this. I did want to, but it becomes so cluttered with so many transactions that you have to fill out each time. It became a very draining process for me, especially as now I don't really check my performance that much at all. I'm confident that even if I'm having a few bad years, that eventually it will come together and it will push up. And so the amount of flack I might get saying, hey, look, you're underperforming, buy index funds. I'm not looking for instant results for this. I'm looking for longer term wealth generation and to absorb as much knowledge as I can in the present. Hence why one of the stocks I've been buying lately is Boohoo. You may be wondering, Boohoo at £2.80 is quite a high price in the short term. However, I believe that over the long term, this stock could be well more than that. And in fact, I'm happy if this price stayed like this for the next 3-4 years. I would have absolutely no concern, even if it stayed for the next 10 years, as long as if underlying they continue to grow their financials, and their revenue and earnings growth have been fantastic in recent years, even though their estimated guidance for the full year of 2021 is only 25% revenue growth. That is still very, very strong, and this is a company that I think is of high growth and can continue to bring this growth to the table. And sure, they are trading at a premium valuation on a price to earnings relation. However, I don't think this is entirely relevant because I do think stocks are capable of upholding that. For instance, let's say they continue to trade at this share price for the next few years. This is only going to drop, and then they're going to be seen as more valuable, more cheap. And so people are going to buy in again. So I do think that underlying financials are going to be the main shareholder value driver for me in this investment with Boohoo. And that's why I've bought an additional 44 shares, despite shares not being the best time to buy them. In fact, I could have bought them a day before on Tuesday instead of Wednesday, but I didn't. I just needed to average some in money and leave it at that. Overall, it's not really increasing my average share price by that much. And I think over the longer term, I'm not going to be worried about 0.4 of 40% of a penny, because realistically, this stock could be in the double digits, and then I'm not really going to care at all. Although as of recording, Boohoo has been stagnant. It's only been moving about 0.1% downwards. However, I do not have any concerns of that regard. And if you'd like to sign up to my stockbroker Freetrade, where I have all my investments, you can get a free share worth up to £200, but at least £10 if you sign up before the end of August. So click that link in the description down below. We've also got Games Workshop nearly pushing up to all-time highs. I've mentioned this before, this is my highest conviction stock. and I'm still on edge. People have been asking me, when am I going to be buying Games Workshop? You said it's your highest conviction stock, but it's not your largest position in the portfolio. What's quite going on there? I'm being patient. I'm hoping that my lesson in patience will work, so that it means that eventually Games Workshop shares may cool off slightly, or I can get a better value on the investment, so that I can put a little bit more cash in and build up that position for the longer term. If not, if the shares continue to rise, then I still continue to make money, albeit less as if I'd have bought in at this price, but that is of no concern to me. I have no plans of selling the investment. Instead, I plan to continue to hold for the long term unless the story changes, and at the moment, the story seems very strong. I did, however, encounter a few posts, and these were on Facebook, for instance, and they were talking about Warhammer and some fan-made animations, and I did see quite a lot of hate for the management of the company, which I am very much interested about, but I could not quite originate the source of why this was. Perhaps it was because they changed up the whole tabletop game and the rules, and that may have alienated old players, but if you do know the answer to this, please leave a comment down below, as it is very intriguing to me. And we also have their subscription membership, and I believe that's releasing very shortly. I will likely be signing up to that with hopes that I can learn more about the Warhammer universe and see what this product has to offer, because a subscription service would be a great boost for the revenue of the company and also the earnings. And this could give consistent cash flow, which could mean they pay even more of a dividend. Even though, whilst yes, I do have the stock and they do pay dividends, I would prefer they reinvested that back in the business, but they've proven that they don't necessarily need to do that. One stock of mention that has been brought up a few times is Ashtead Group. A lot of you, or a few of you at least, are wondering why I still hold the investment. Why don't I just sell Ashtead Group now, buy Boohoo whilst it's relatively low, seeing where it could be in the long term, and then be happy, have only 4 stocks to look after, stress-free, not worry about Ashtead anymore. I'm personally not going to do this as of yet, because I was uncertain when I initially trimmed 50% of my position. The idea was that I didn't quite understand why it was going up. I knew that it was the US infrastructure stimulus and large buyback or shareholder buyback plan, but I wasn't quite sure how well they would do much longer term. I looked at their revenue guidance and how much they'd grown in the last year, and it was single digit figures. And don't get me wrong, this is a big company, so it is still impressive in this industry, but I wanted to look for stocks with higher levels of growth than that. Henceforth, I trimmed 50% of the position, but because shares had done so well, I figured I would let my winners run. So I'm going to let Ashtead Group continue to run. I've set a stop loss that is 20% lower than the all-time highs, which would mean if it did sell and it sold my entire position at the stop loss price, yes, I'd lose about £150. And then I could then have that in cash. I then have powder dry for the next possible dip, or available for a new position to enter in another stock. One that I haven't spoken about much is Best of the Best. This is held outside of my ISA portfolio. I have had a few questions on this. And yes, it would be very wise if I bought the dip on this. I believe I hold around about 17 or so shares. My average price is about £19 per share, so I'm down about 60%. This was a relatively small position, and yes, I probably should cut my losses. I don't actually have cash outside of the portfolio spare. At least my money wants to go into a tax-free ISA shelter, so I'm not buying any more of this dip. I could use it as a form of deferred liability, I believe, but I don't think I earn enough income to reach that threshold, and so it may not be worthwhile for me. Instead, it seems logical that I just continue to hold this investment. If it continues to drop, maybe I'm earning more in a further forward tax year, and then I could use that as a liability, or the shares could quite recover. If I do become somewhat wealthier, for instance, and I do get a larger income and I have more money that I can invest, then I would likely average down on the stock. But then the story has somewhat changed, but then that is reflective of the changes in the market environment, and so it does make sense to me as to why this may have happened. And then Team 17 has also recovered fairly well in the last few days. This is actually bouncing slightly back and tracing its steps upwards from the whole Sumo acquisition of by Tencent, and I think the industry is a little bit more full of hype as of late. I personally had been interested in buying the dip, but it didn't quite drop low enough for me, and so I left it clear. As I said, Boohoo is my second highest conviction stock, and I think Boohoo have got a lot more growth potential than the likes of Team 17, but Team 17 certainly have a cracking management and a good industry that I believe will do well over the longer term. You've also mentioned to me, why not invest in a haircut? Surely you have the money or capital to do that if you look at the portfolio, and the reason I've not done this is because I don't think I need one. Sure, it's in the awkward stages, this bit puffs out, whatever. oh well, I'm not really bothered how I look. As long as it looks somewhat presentable, I'm happy enough. And I hope that it will grow longer. And already I'm saving money from the haircuts, which theoretically I could have invested in the portfolio, but I invested it in alcohol and drank instead, which probably isn't the best thing, but hey, at least I'm somewhat saving money, and I think longer hair suits me better than shorter hair. I think at a younger age, you want longer hair to make yourself look older. Although this is well off topic and that went a bit crazy. I'd like to try and build up cash in the next few months. Hopefully when Boohoo does start to recover, I may have a period of a few months where I'm not buying any stocks, or I'm buying very small nibbles of stocks so that I can continue to build cash, because what I've learned lately is that cash truly is king, and when there is a dip in the markets, it is very important to have alongside so that you can take advantage of these. For instance, some of the stocks I recommended in my August stocks to buy, two of them are down quite significantly. That's Sylvania Platinum and also the likes of Avon Protection. And so at that point, it could be worthwhile buying those dips. I am watching them, but I don't have the cash available unless I sold one of my other investments, which seems like a bad idea because then I'm just trading between stocks and then I'm likely to mistime it or make mistakes doing this, and I'll likely miss out on some of the returns. And I don't think when you overtrade your investments in a portfolio, I think that leads to the average investor underperforming significantly. I believe that once I've got these stocks, I should continue to hold them unless the story changes or my views change on them, which again is the story changing. If you're interested in my free UK stocks to buy in September 2021, then click the card at the top right of the video. Thank you for watching. I'm Foreman. Have a fantastic day.